The main question we're getting is why not sell? Why not sell your stocks right now? We've seen a 20% recovery in the market, and the first answer to that is you probably should sell if you have expenses coming up.
Right.
Right. And our advisors have been reaching out to say, hey, let's refill our cash hubs. Let's get 15 months of expenses. Let's set it aside so we don't have to worry about what the market enters another drawdown. So the first answer is yes, you should if you have expenses.
But only up to the expenses that you need, right? We're not abandoning the market at this point.
It's a technical bull market. We do expect earnings to recover. There is a strong disinflation pipeline. Not my words. That's what Powell said yesterday at the FOMC meeting. And then we'll make a final comparison to the tech bubble and see, is this the tech bubble 2.0?
And a lot of banter going on in headlines on that.
There has been a lot. So getting into the S&P 500, this is a 52-week chart. So we can see circled in red is the lows of October. It's a 22% recovery from the low. That's why we're saying it's a bull market. You hear those numbers thrown around at 20%. 20% drawdown from peak to trough is a bear market. We recover 20%, you've now entered a bull market, even though we're still in this larger frame drawdown.
Right, the math may mean you're still not at a new market high, right?
Exactly. And the one thing I wanted to point out here is it's moved pretty quickly. As of recently, the last few months, we really have shot out above some previous resistance lines. You know, it's too early to say if that will turn into support and be strong, keep the market up here. You know, there's probably some fundamental reasons why maybe it'll come back down and kind of settle back in to where it was, still up significantly from the lows. But I just want to zoom back out and show exactly what you just said. Right, we're in this 20% recovery, but it's still a drawdown.
Right. And to me, this is looking like a normal, prolonged recovery where you still have headlines that are problematic. It's not the all clear, but we're climbing that wall of worry at this point for sure.
And it's probably not healthy to keep moving up as fast as we have.
No.
So we do want to start seeing slowdown. Probably wait for some fundamentals to come through. You know, we'll have earnings a month from now. Something to really help the market really digest what's been happening.
And I know you know technicals better than I do, but if I look at this chart, really to me we're back on the long-term trend. If I start at the beginning of this and I just draw a line, where we were out of the norm was the 20 to 21, 22 run-up where we got extended and beyond that trend line. This seems to be a healthy market, and what was unhealthy was the previous highs.
So to your point, reconsidering taking off some selling of some equities if we get back to something that's outside of the trend that you're saying, but we're still on that long-term trend when you draw a line back for over 5-6 years.
Right, and people may say, well, why didn't you get us out in the high? Well, remember we did have 36 months of cash set aside at one point during that time frame.
Yeah.